Okay, so this is a changing fundamentals play on Nvidia. So with this trade strategy, I look for unusually good news, an opportunity with the long-term technicals, holding above VWAP, gap above 3% with elevated RVOL, and obviously holding the gap. Buying interest is apparent and early, and this is a trade to hold with a reason to sell. And in this specific case, the unusually good news for Nvidia was announcing a stock split. So here are my potential reasons to sell. If my price target is reached, intraday uptrend is broken, breaking news in the stock or the market. I use a trailing stop on the 1 hour, which is the 50-day SMA EMA. Unusual seller on the tape, or the daily Bollinger Band fails as well. So trading plan is to look to buy the dip on day one with clear level to risk off of. You could take opening drive plays to add cash flow to the trade. Since this is going to be a swing trade, there's plenty of opportunities to scalp the opening drive to add to your swing. You obviously want to scale out into strength with this trade. Always look for reasons to sell and always keep that bigger time frame in mind while following the trend. So here's a bigger picture. I have the cues pulled up. This was the day where we reclaimed the 50-day moving average on the daily, which is a pretty important level. And there was not much going on macro wise. It was just pretty much a slow grind higher in the SPYs, and the Q started to reclaim as well, an important level at 326. So here's a sector strength with semiconductors. We were starting to break out, obviously holding the 50-day moving average and starting to break out into a new uptrend, which was really important for this trade and gave me a bunch of conviction with this Nvidia trade. Something to note for stock splits, these are the charts for Apple and Tesla I'm about to pull up. We've had like a lot of momentum when it comes to like these big cap and these large cap names reporting stock splits. So with Apple, very similar chart pattern to Nvidia, where we break out on the split news. This was the last day before to get in before they issue the shares, and this is when they actually start to trade stock adjusted split. So after that, there's typically a big sell the news, and you could see that Apple fell 25% after they announced that split. I mean, actually, after they did split, but the momentum into that event was really strong. And then same thing with Tesla. We had a nice consolidation break, crazy momentum with really nice channel to the upside. And again, when we had the sell the news event, we fell really hard. So here is a technical analysis for Nvidia. Very similar chart pattern to the other two, where we break out of this consolidation. This candle right here, I don't know if it's a little small, but this was the day they actually announced it, and this was the following few weeks after that event. So very strong uptrend. So here's our technical analysis on the 1 hour. So on the 21st, we have that first, we have the news come out, 3% gap, and we hold on the 1 hour channel. And going into earnings, we actually did trade a little flat. And at earnings, we didn't move at all, actually, but we still remain in this tight range for a few days. So we'll go over the trade management and how I played this long setup as well. And then here's the 5 minute. We hold the gap on day one. Day two, really strong above VWAP and holding. When we approached earnings, we actually broke down from this trend line and traded choppy. And then earnings, we just had a complete cuck, not much happening. but the next day we had a few price upgrades and other catalysts to drive the stock over resistance. And then the second day was really nice leg up. And then after that, it just continued with its trend, which was super clean. So here are the intraday fundamentals. So like I said, May 21st, Nvidia announced that they were going to do a stock split with pending shareholder approval on June 3rd. Obviously, they got approved, but that was the headline that came out May 21st. May 27th, we had earnings, which was really good. Pretty much a triple beat, raised guidance, and we had a bunch of upgrades the same day from really big firms, all with price upgrades. So pretty important. And then June 2nd, there was some ARM acquisition news, which was somewhat important, but here are the day one stats for when it announced its split. So it had an R-vol above 2, which is not like crazy high, but for something like Nvidia, this definitely grabs my attention. We had average daily volume of 8.64, ATR of 21.74, short float not that high, 1%. Shares float almost 600 million, and institutional ownership almost 68%. So here are my variable checklists. Pretty much met the criteria for the trade. Tons of variables for this, including some other ones right here where we had strong option flow, strong sector, really strong tape, and buying at VWAP with multiple price upgrades and trend line, and very easy technical analysis levels to risk off of. And this trade was pretty much very clean from the get-go. And then obviously the trade strategy met perfectly the criteria. So here is the option flow and dark pool prints for Nvidia between 521 and 6/7, which was the day I got out of the trade. But I filtered this based on the highest amount of premium. There's obviously a lot more flow that came into this name, but I just want to highlight the screenshot that there was aggressive call buyers in this name and constant flow and dark pool equity prints every single day. So that is another variable that I could add for the swing trade to work. And I also keep in mind the strike prices of where they're buying these aggressive calls. So when we get into those areas, I like to see how we react. So here is my trade management. So on day one, I took the opening drive bounce trade, scalped it into strength. So these are all the executions here. But towards the middle of the day, I actually did put on a swing position right here. Option position, I bought June calls swinging into earnings. This was a time where IV, implied volatility, wasn't that high. And just the IV alone could bring the calls into profit. So pretty happy with that. And obviously I did swing some of my position, risking just this gap here. And then the next day took a scalp above 108, sold some into strength. And then when we started to break down from trend line, I actually got flat the position. I knew that going into earnings, it's very risky to hold an option contract. Usually IV crushes, and we actually did get a big IV crush after earnings. So that's something to keep in mind when you're swinging options, is to always look at the implied volatility after earnings. And typically it pretty much crushes. So I sold that when we got into the trend line break. Earnings were really good, but on the second day play, that's where it started to break out of 635, and that's where, or I'm sorry, 630, or actually it should be 635. That's a typo there. But yeah, I didn't take this opening drive play, second day play above 630. That's something that I want to like get better at. I wasn't watching it at the time, so I missed it, but that would be my ideal trade management, adding above that resistance break. The third day after earnings, I took bounce trade that did not work, but then I noticed that we started to hold this trend line that was developing. So I actually re-added to my position right here at 636. Took some more cash flow trades over here, opening drive bell scalp, and then around 700 was my price target. So I exited here, left runners, but I actually did get stopped out right here when the trend line broke on the 1 hour. So we'll see if that was a good decision or not. I'm actually looking to get back in because we do have the stock split on July 20th. So there's still tons of room in this name. But for now, I'm completely flat. But I'm overall very happy that I was able to keep a core from day one, or well, from day one, getting flat into earnings and then re-adding after earnings and finding a really good spot to get long close to this 630 break. So overall, pretty good trade management in my eyes. Oh shoot. 37.19. Sorry, just give me 1 second. I forgot to make that like a link. Just 37.19. Okay, you see my screen, right? I think you guys could see.
Yeah.
Okay, so this was the tape from the second day play after they reported their stock split. The level I'm looking to get long is 608. We broke that pre-market with pretty decent volume, so I actually did take a position into it with pretty tight stop, like basically $1, $2, right? And I'm looking to exit at this 1 hour volley at 613. So I'll just play the tape off the open just so you guys could see the aggressive buying that happens after day 2 of the stock split news. And I'll speed it up because it's a little. So right now this is just pre-market, waiting for it to open, but we did break that 608 level. So really aggressive tape, pretty much hit that 613 target that I was talking about, that 1 hour volley, 614, 613. So that's the opening drive play that I took. Then there's another part of the day that I want to show. So the next area I'm watching is the 615. And we actually had call buyers around that area as well. And then here we just get some profit taking. Yeah, so after that, we just hold that 1521 and continue to trend higher for the rest of the day. But that was just a very clean example of where it breaks resistance, fails it for a second, but then rebids back up and then trends higher. So that's pretty much the tape for Nvidia. And then for the trade review, what did I learn from this trade? Scalping the open plus trading around a core is a goal that I touched upon in my other playbooks. I know I talked to Mike about this, and he says that there are two separate trades with two different variables between being like a daily breakout, changing fundamentals, whatever you want to call it, and opening drive play. But what I've found really helpful is that being nimble around the core like really fits my personality, where like I could have a swing position and like be confident holding it because I'm scalping and reading the tape well. But another thing that I learned is that managing the position pre-earnings and being patient and avoiding an IV crush with my options play was really good. And I'm happy that I recognized that beforehand. This was one of my best swing trades. So a lot of the swing trades I do typically don't work out for me. So trying to get better with that. And this was a pretty decent trade, 8R for me. How could I have done better? Size up when I have conviction. This was a trade that I could literally add 3 to 4 times my risk once I become more of an experienced trader, because I knew that Nvidia was a stock that I'm really good at trading. Like I've traded this a lot, and it just really fits my strengths. So overall, like technology stocks. So sizing up when this opportunity comes around, because like these trades do not come often at all, you know. So this was pretty high conviction for me. Um, and then something I could have done better was taking that second day earnings scalp above 635, like I talked about in the trade review or the trade management. Sorry. But I did a good job being patient and waiting for that level to get retested by taking that 636 bounce and not just chasing it higher. But ideally, adding above that first initial break was something I could have done better. And how could you trade this differently? But treat the cash flow trades and the swing trades as two different trades with two different playbooks, and allow myself to be nimble and let the scalps work. But at the same time, I need to take the hands off the keyboard and allow the swing to work as well. I was taking profit into the swing a little too quickly, but being aggressive with my scalps. And I think separating this into two playbook trades could actually help me. But other than that, I'm really happy with the trade. And yeah, that's all. So if you guys have any questions, just let me know. Do junior interns get access to the option flow site? No. I pay for it separately. It's called Flow Algo. You could use something like Cheddar Flow. There's even some free ones on Twitter that you could use. What are the faded green and yellow charts? Yeah, those are the indicators I use. I use something called the PS60 strategy, which is just like a bunch of moving averages. And I trade based off the channels from that. So if you want to DM me on Discord, I could like show you my chart setup. It's a little complicated to explain and get into, but I could definitely show you like how I trade based off the 60-minute channels based on that. Okay, bet. And yeah, my Discord is just Yanni #001. It's pretty easy. So what other changing fundamental catalysts you like to look for swinging multiple days? Unusually good or unusually bad news that directly affects the company, right? So like another example would be like the Tesla when they got added to the S&P 500. That was unusually good news for them because everyone was kind of like Tesla was a controversial stock at the time. There was many bulls, many bears in the name. So like for it to get added to the S&P 500, that was like a pretty big deal at the time where like indexes had to buy it. So like that's just another example, but typically looking for like unusually good or unusually bad news in a stock, as well as the other variables that I mentioned. Well, earnings would be a different catalyst in itself. I mean, you could group it into the same playbook, but you definitely treat it a little bit different, I think. I mean, with this specific trade, Nvidia did have really good earnings as well. That's just another variable. Like decent earnings, I would like categorize as like a second day play or a first day play where a stock could trend. Like unless in the earnings report they announce like something different with the business model. Okay, cool. You guys have anything else? If not, I think we could just wrap it up.
Yeah, it seems like we're good.